Good morning. I apologize for the delay. Technology is a wonderful thing when it works. When it doesn't work, not so much. I'd like to thank you here this morning and welcome you to our business investment and succession planning workshop. It's a morning that I'm hopeful will generate some discussion and a little bit of conversation. I'd like to recognize our partners in this event. Jenna here is with the Chamber of Commerce, and I'm going to ask her to come up with me, and we're going to begin the morning with our land acknowledgement and then move on from there.
Good morning, everyone. Thank you all so much for joining us today. I'm so happy to see such a nice turnout for this event. Before we get started, I do want to say thank you, of course, to Todd for helping to plan this event. And I would also like to acknowledge that we are in Unama'ki, the unceded and traditional territory of the Mi'kmaq, and we would like to extend our acknowledgement, honor, and thanks to the Mi'kmaq for sharing this beautiful island with us. So, thank you.
Thank you. So just a sound check, everything's coming through there at the back of the room. Perfect. Succession planning and potential investment. We thought that we should maybe delve into this area based on some recent media and some stories. We've had some good news stories in the local media with some businesses that have successfully transitioned. And we thought we'd like to encourage that and maybe get some discussion going. It's an interesting problem, an interesting thing that we kind of have to work at in the local community. Succession planning doesn't happen by itself. So on behalf of the Island Sandbox and the Chamber of Commerce, we kind of got together and we thought that maybe we'd sort of start this discussion and maybe offer ourselves as a conduit for bringing people together in order to sort of facilitate some of this important work. So when we look at succession planning and investment, there's a lot of topics that you can really discuss, and we're going to have a few presenters here this morning that are going to assist us with that. There are issues in identifying both prospects and successors. There are issues with understanding the evaluation of a business, and these issues happen on both sides. And investors sort of got one evaluation, and maybe the seller has another evaluation, and somewhere in the middle we have to accommodate the sort of a reasonable set of expectations. And then working to actually fulfill and process and undertake that transition, both in terms of preparing staff and perhaps training a sort of an oncoming investor, and making sure that the business is sort of positioned to sort of move forward without interruption. And then you get into stuff like tax and law and whatnot. So those are all important issues. And we're hoping that we're going to have some discussion here today on that. So at any point in time, please feel free to sort of raise your hand and sort of ask any questions that you might have. On the agenda today, we have some great speakers. So we've got Rob Wadden from Grant Thornton, Sean McDonald from Manly Law, Chris Kalanko from Labor Skills and Immigration. And in the end, we're going to have a guest panel with a number of people that have gone through this process and are hopefully able to sort of speak to some of the questions and some of the issues. So one thing I did want to address in my opening is why we're doing this or why this is an issue locally. And one thing I always turn to is demographics. So if we look at Cape Breton Island, we have a particular set of demographics compared to the rest of Canada or the rest of the world. And briefly, I love these. These are population pyramids, and this is information that's available on the Statistics Canada site. And this particular graph, and I'm going to refer to it just along the lines a little bit, so I thought I'd define some of the aspects of it. You can see that sort of on two sides, we have a male-female demographic. And then as you go up and down, you'll see the numbers in the middle. So we've got an age range. So what we see in the Canadian spread, the Canadian set of demographics, is that we have a little bit of an older population in Canada overall. And you can see as we go through generationally that we have boomers, X, millennials, Generation Z, Alpha, and they all occupy different parts of that parts of that graph, okay? And as we know, we probably in Canada have a larger number of boomers and perhaps fewer as we go down through Gen Z and Alpha, okay? So when I switch that view to Nova Scotia, now the view here goes, the Canada's in the gray, and then we've got Nova Scotia in the purple, that outline. It gets a little older, it skews a little bit older. And when we look at that breakdown again, you can see where we have more older people and fewer younger people by percentage. And if I narrow that down a little bit more, we get to Cape Breton, okay? So Cape Breton's got a little bit of, again, a little bit of an older demographic again, and perhaps fewer younger people. And this is where perhaps some of the problem with business secession, overall for Canada, but more specifically for Cape Breton lies, in that we probably have business owners who naturally are perhaps a little older, okay, just based on their position and their number of years in business, and they'll be looking to pass their businesses on and have them purchased and undertaken by younger people. And in Cape Breton's case, we have more older people and fewer people taking up that mantle, so to speak. So we have fewer millennials and Gen Z taking the place of our boomers and maybe early X generation. Okay. Now this is a problem and an opportunity, and that's what I wanted to present here today, was that we have this sort of middle sweet spot where we have an opportunity based on some of the work and success that Cape Breton University has had with bringing in international students. So we know that overall birth rates are perhaps on the decline in North America, and definitely we're finding that happening in Cape Breton. But we've got a bit of an interesting situation where we have this input of international students that are injecting themselves into our community at the point and at the age where they fill this red box, okay? And they can in fact expand out those opportunities. So it's an opportunity for younger people, and I'm just presenting international students as an example here, but for younger people to sort of slide into that, because there's a bit of a hole available. And for the businesses that are interested in looking for succession, these are potentially the people that are going to be picking up that mantle and can fill some of the hole that we've had naturally happen through lower birth rates and the natural demographics. One other sort of bit of information I'd like to pass on, just to put this in perspective. So this last year, Cape Breton Victoria Regional Centre for Education, so high school, graduated a little over 1,000 students. Now, the university this year graduated over 1,500, and of those, 1,100 are international students. It's like adding a whole other high school. It's like adding a whole other stream of individuals that would have gone through grade 3, 4, 5, 6, 7, up to 10, okay? And then exiting as adults and ready to take their place in our community as 20, 30-year-olds. So through the international student effort at the university, we've literally added a whole other stream of young people, okay, and perhaps doubled the opportunity. So this is one of the reasons why the Island Sandbox and the university is interested in fostering this discussion, because we want to provide some opportunity for the international students and bring that to the forefront. Of course, that opens up to all the other members of the community as well, including businesses, hopefully, that are in a position to sort of pass on some of what they've been doing, perhaps to a next generation. So with that said, I'd like to switch the floor over to Rob Wadden from Grant Thornton. He's going to talk to you about some of the financial issues with secession. And I'm going to invite Rob up, and we're going to switch on his mic, and I'm going to switch mine off, and hopefully our little technical experiment here will work just great. So give us a half second, and we're going to flip over here. Thanks. Hello, hello. Good. Just wait for that.
Great. Thanks, Todd, for having me here. As Todd mentioned, I'm Rob Wadden. I am a principal at Grant Thornton. So we deal with a lot of business owners day to day, but we've also seen a lot of activity the last couple of years in terms of succession and people finally transitioning their businesses to the next generation. It was something that we talked about. We talked about a lot, that we knew our business owners were aging and they were looking to get out, and for a number of years it was kind of always out there, and we didn't see a lot of transition, but really the last 2 or 3 years we've seen a lot of activity in this area. I think it's stressful for a lot of business owners, and they're finally using this as their reason for moving. So my presentation talks about a couple of different things. I know we have both business owners looking to transition their business, as well as people looking to buy into business. So our presentation covers on a couple of different avenues. As Todd mentioned, if anyone has any questions as I'm working through this, we don't have to wait till the end. Feel free to interrupt me as we work through it. So our agenda here first is just to talk to you as potential business owners and how you might want to structure your business. So do you want to incorporate, or would you want to be a sole proprietor? Then we have a section on mergers and acquisitions, so looking at how you might structure an actual business purchase. And then for the business owners themselves, what the sale process would look like for selling their business. So incorporation versus sole proprietor. So if you incorporate, there's a number of benefits and drawbacks. So some of the benefits with incorporation is limited liability. So if something happens within your business, and let's say the business gets sued, the possible exposure is limited to the assets held within that business. So if there is an issue, they can't come after personal assets. So that's a huge benefit of incorporation. It continues after death, so there's no transition. Normally what we'll see in this situation is shares will just transfer over to your spouse or whatever is kind of laid out within your will, but the business doesn't go away. It does continue. Access to the small business deduction. So this is a huge benefit of incorporation. So right now, the personal tax rate, so if you're not incorporated, the highest personal tax rate is upwards of 54%. So half your profits going away in tax. If you incorporate and you leave those earnings within a business, the tax rate is 11.5% right now. So very significant spread there. Access to the lifetime capital gains exemption. So this is one for the business owners out there. When you sell your business, when you sell shares of a business, so this only happens in an incorporated entity, you can access what's called the lifetime capital gains exemption. So every person has almost $1 million. It's going up to $1 million. It's at about 971,000 right now, but that you would realize $971,000 in proceeds from a sale tax-free. So definitely a huge savings, and we'll have a slide later that'll illustrate what that actually means. Easier to raise capital, so it's easier to get financing from a bank or a lender in a corporate structure than trying to access those funds in a personal situation. Seamless transition of ownership, so we'll talk about that, about how that actually works. Income splitting. It used to be a real benefit of incorporation. It's become a little bit more restrictive over the last couple of years with some changes in government regulations. Some of the drawbacks of incorporating, it is a little bit more costly. You need to file tax returns. You need to get lawyers involved to incorporate an entity for you. A little bit more complex and more regulation in terms of the business from what you see in a sole proprietorship. So sole proprietorship, basically it just means you have a business under your personal name. You're going to have revenues and expenses, just a business statement that's going to kind of get accumulated with any other personal activities you have. It's very simple. You don't have to go that incorporation route. It's just a matter of kind of keeping track of all your revenues and expenses, and this just gets reported on your personal tax return. So it's least costly, and it's not an additional reporting for corporate returns. It just gets added on as another schedule with your personal return. Some of the drawbacks, as I mentioned, liability. So If you are a sole proprietor and there is an issue, that's where some of those personal assets can be drawn into any potential issue. Difficult to grow due to marginal tax rate. So as I mentioned, at the highest rate you're paying 54%. Maybe depending on your income level, it's 30%, but that's still a significant spread from 11.5%. So there's an extra, could be upwards of 40% being paid to the government that you're not able to reinvest in your business and grow your business. Financing, I mentioned that, and a tougher ability to income split, but that's not a huge item anymore. So what else do you need to consider? HST. So you as a business owner, if you have HST, if you have sales greater than 30,000 in a year, you're required to register for HST. So that is something very important. That goes whether you're a sole proprietor or a company. If you cross that threshold, you will need to register for HST and be on top of your filings for CRA. So a lot of these things, as we'll talk about, it's really important to kind of get your structure set from day one so that you know your reporting obligations and you can stay in front of CRA. That's one entity that you don't want to come calling or fall behind on anything. So it can build credibility. So if people see you as charging HST, then you're a little bit more sizable of an entity, so that can help. Cash flow considerations with HST. So the minute you send an invoice, whether you actually collected that invoice from a customer or not, you're required to remit that on your next HST return. So it doesn't go based off of when you collect money. So there can be a bit of a cash flow concern depending on how big your invoices might be. Reporting remittances. So it depends on the size of your business, but you might have to file HST monthly, quarterly, or annually, and that can be set with CRA. There is the quick method, which is an easier way of dealing with HST, but it doesn't allow you to collect any HST for HST on your expenses. So that's done on a case-by-case basis as to whether that actually makes sense or not. Accounting records, very important for investors, financiers, or looking at tax credits. You need to have good accounting records. So right from day one, you want to make sure that you have a structure in place, that you're able to keep track of all your ins and your outs and everything. And the requirements of that is going to depend on what you have from external parties looking for your information, and whether you're incorporated or not. But it's something you want to get set right from day one. We see some people will do this in Excel, which depending on the size of the business may work, but typically what we'll see is an accounting software. So QuickBooks would be the one that's most popular in the industry right now that we see most commonly. So again, getting that set up from day one is going to save you a whole lot of trouble and heartache. A bookkeeper. If you as the business owner either don't have the time or the capabilities of keeping accurate financial information together, really important to hire a good bookkeeper, so that you don't have to worry about that and you know that the information you're providing is accurate. Year-end financial reporting. So if you are incorporated, there's a couple of ways to go. There's a compilation engagement that an external accountant can prepare, which will add a little bit more credibility to the statements you prepared internally. There's a review, which requires a little bit more work, but it's giving a little bit more strength to the financial statements, and an audit, which is normally kind of driven by financing arrangements or funders. That's more on the incorporated side, because as I said, with a sole proprietor, you're just reporting that on your personal return. Paying yourself and employees, so payroll. You want to make sure you're calculating any payroll tax obligations correctly, again, right from day one. Keep track of those payroll taxes. Payroll remittances are due every month. So if we're looking at June, at the end of by July 15th, you need to file your June payroll remittance. So that's something, again, if you're not on top of that, you're going to have. There we go.
Okay, we're almost ready here. We're going to introduce our next presenter and keep things moving along nicely this morning. We have Sean McDonald from Manly Law. He's going to talk about some of the legal questions and aspects that may sort of come up when you're looking at transitioning a business or investing in a business. So we'll switch over and give us a nice warm round of applause for Sean McDonald. Manly Law. Thank you.
All right, thank you. Can everybody hear me? Is this mic working? Yes, okay, great. So as Todd indicated, I'm here to talk about a variety of legal issues that come up when you're succession planning. I'll start by saying, you know, being a lawyer here in Cape Breton, I do a variety of different areas of law, including business law, but I also do litigation. And the judges always say when you're standing before them, could you please just stand still when you're speaking to the court? And I'm never able to do it. So I'm going to be moving around a little bit as I speak, because it's just the way I operate, I suppose. So don't be distracted if I move around a little bit. But having said that, we're going to talk about a variety of legal issues this morning. So obviously we're talking about business succession. Has anybody watched this show? And if you haven't, you should. So this show is all about, well, by its very title you can tell, succession. And without giving away too much, this gentleman in the front here is the owner of the business, and needless to say, he engaged in very poor business succession planning. And the whole purpose of the show is basically everybody fighting over who's going to take over the company. So tip number one, don't follow his example. Okay, so I'm going to talk about basically 4 different options for succession. One of which includes transaction between family members. One of which includes sale of the company to an employee or a manager. The third would be to a third party, so just a completely independent party that you're selling your business to. And the fourth will deal with basically estate planning, so dealing with the transfer of your interest in a company through your will, for example. There are a variety of factors to consider for each option, so I'm not going to reiterate everything that Rob said, okay? But I will, at various points, emphasize the importance of speaking to an accountant, okay? Because there are certain things that your lawyer basically shouldn't be giving you advice on, otherwise you're going to give bad advice because they're not properly trained to give that type of advice. So the key factors really in every transaction, depending on, you know, whichever avenue you pursue, is valuation. So valuation is a critical factor for all the reasons Rob touched on, and tax efficiency. And those are really tied together. Your valuation is going to impact your tax efficiency. Now, tax efficiency as well ties into the structure of your business, how you have your shares structured, what rights are associated with the shares of the company, and how you're going to transfer those. But valuation is a critical element of the process. And I'm just going to talk at a very general level. So this is just general legal analysis. The classic lawyer, well, there's a lot of classic lawyer jokes, but one of the classic lawyer jokes is you ask a lawyer a question, you always get the same answer. Does everybody know what the answer is that you get from a lawyer every single time? It depends, right? So, but it's true. It depends. It depends on the nature of your business. It depends on how your business is structured. It depends on who the buyer is. It depends on a variety of factors. So all of which is to say, this is some very general information. We always give the same disclaimer. Don't take this as legal advice. If you need legal advice, you should speak to a lawyer. But I'm going to deal at a very high level with some guidance and tips for the 4 succession options that I talked about at the start. Okay. Did I go? Yeah. Don't mind me. I'm not great with technology. I'm kind of discredit to my generation. But it was reassuring, actually, on Todd's graph at the start. I saw that the median age for Canada was 41, and I am 41, so I just had a brief kind of midlife crisis when he did that. But I saw that the median age for Cape Breton is 44, so I'm good. I've got a few more years before I reach my midlife crisis. So I already talked about this already. There are 4 main ways that business owners hand over control and operation of small businesses to a successor. So it does happen that you pass your business to a family member, and you asked that question earlier of Rob. So that does happen. There are unique factors that go into that and considerations, and well, frankly, value. There's a variety of different factors that go into passing a business to a family member, but it is an option. You can also sell the business to either senior management or your employees. That can either be done in one fell swoop or it can be done over time. You can sell the business in one fell swoop to a third party, so sell the whole thing subject to, I believe someone was asking the question about what if you want to retain, a 5% interest in the company and that sort of thing. You can structure your transaction that way, but that is going to create, some issues in valuation, some issues in how the business is operated going forward, depending on the nature of the 5% that you retain, what types of shares those are, and that sort of thing. But you can do that sort of thing, because tied into all of this, the part that nobody really likes to talk about is the personal dynamic of this, right? So you as the business owner have developed this business over time. You put a lot of blood, sweat, and tears into it, and it's hard to let go. It's hard to let go of it, right? That's just human nature. So sometimes people do want to retain an interest in it, right? But as Rob quite rightly pointed out, when you're dealing with a buyer, they might not want to have you around, okay? That's just the reality of the situation. Depends on the relationship. Obviously, if it's a family situation, that might not be the case. But if you're just selling to an independent third party, they might not see the value in having someone retain a 5% interest in that business. So there's a lot of legal dynamics, but as with all legal dynamics, there are also personal dynamics tied into it. And lastly, you can pass on the interest in a business in your will as part of your estate planning. There are a variety of issues that arise in that context, and I'll give a general overview of what some of those may be. Okay, so again, the two key factors when considering succession options, depending on whichever avenue you pursue, are valuation and tax efficiency. So Rob talked about this at length. I won't belabor it, but there's no single formula to value a business, and he had all kinds of calculations up there, and that's why you go to speak to accountants, because I went to law school because I was told there'd be no math. Because it's really important, I make light of it, I make jokes, but it's really important to have a proper valuation of your company when you're going to transfer it to someone else. For all the reasons that we've talked about already this morning, there are significant tax implications, whether you're going to qualify for any sort of capital gains exemption, whether the business is properly valuated. All of that is going to create potential issues for you in the succession process. So the valuation process cannot be understated. It's critically important to the whole thing. And obviously, the bigger and more diverse your company is, the trickier it is to value, because there are a variety of factors that go into the valuation of the company, and the more moving parts that you have, the trickier it is to do that. So valuation is, at its core, driven by essentially two elements: your tangible assets and your intangible assets. So tangible assets, it might be self-evident, but those are the things that you can sell outright. They're the things that, you can touch and feel and sell to someone else. So machinery, inventory, your accounts receivable, and if there's any real property affiliated with the company, that can be part of the tangible assets of the company. So those are things that, subject to some degrees of variation, are relatively easy to put a price on. It gets much more difficult when you're dealing with intangible assets, okay? So those are things like client lists, which obviously have been developed over, years, decades, a long period of time. Intellectual property, so depending on the nature of your business, you may have developed some form of intellectual property in the course of operating your business. You have to evaluate that when you're going to transfer the business to someone else. In this day and age that we live in, social media influence also has a value, okay? So if you have a strong social media presence that you as the business owner have developed over time, that can be evaluated, and tied into that is a recognized brand. And that all ties into the concept generally of goodwill. So goodwill as a concept can be difficult to evaluate, because each element of that is a part of the goodwill of the business. So it's difficult to properly evaluate the value of the goodwill. So tied into the concept of goodwill is the value of you as the owner of the business and how that ties into the business's worth. So again, if you have these client lists or social media influences or this recognized brand that you as the business owner have developed over time, then you could, as the face of the enterprise, you could have business to the or value to the business itself as well. And so as you can imagine, that is very difficult to put a number on, okay? So these are all things that you want to consider when you're doing the valuation for the transfer of the business, okay? Now, there are a variety of different ways that you can value the business, but the two most common that we would see are just by agreement. So through negotiations between the buyer and the seller, you affix a certain value to the business itself. That's a little tricky for some reasons that we'll get into. Much more common and advisable, quite frankly, is valuation by an accountant such as Rob, an auditor, or if you are able to get access to the services of, and I underline that point, here in Cape Breton we don't really have too many, a certified business valuator. Those latter elements are ones that are more commonly given credence, I'll say, by CRA. Because in all of these transactions, the entity that hangs over all of this, as Rob talked about as well, is CRA, and how they're going to assess these transactions and whether they're going to affix a value to the transaction that's going to create kind of a hideous-looking tax bill for you. So again, for tax purposes, both CRA and if you end up litigating the valuation of the company, which can happen, the tax courts tend to stick to valuations made by, again, certified business valuators, which, again, their services, particularly in the context here in Cape Breton where they're not commonly available, can be very expensive. And I gave Rob and his brethren a little bit of respect because they're less expensive than a business valuator. And I know that's rich coming from a lawyer calling other people expensive, but there you have it. So, but the point being, for the purposes of succession, you may look at that and say, wow, that's going to cost me a lot of money to do that. It's worth it, okay? It's worth it to do at the front end, because if you go back and just say, with whoever it is that you're selling to or transferring to, okay, we agree that the total value, the global value of the company is $200,000, accounting for all of these things that I identified. Well, CRA can go back and say, well, the actual value of this transaction is significantly more than that, okay? That's great that you agreed on that value. You did your due diligence, you assessed it as you felt appropriate in the course of the transaction, but what it was actually worth was much more than that, okay? So you could end up with, I mean, Rob ran the numbers and he gave some examples. We're talking about tens of thousands of dollars, if not more, in tax liability. Whereas if you pay a certified business valuator something less than that, you can potentially avoid that whole situation, okay? Because again, those valuations done by either a valuator or an accountant are going to be given much more credence than the value that you affix as one of the parties to the transaction.
I'm going to jump in for 1 second.
Yep.
So when you're looking at, as a business owner, doing evaluation, there's also some funding that can be available. So there are some government agencies that will help offset the cost of the very expensive business valuators.
And they're not so expensive, the accountants.
No, I'm going to refer you to the business valuator. But there is some funding available that'll offset some of that as well. So again, if you're looking at that, ask around.
Yep.
If you reach out to Coastal or a COA. Yeah.
Yep. So again, that's going to alleviate that pressure on, depending on the size of your business. I mean, there could be cash flow elements of this and, you know, actually paying for these services. But the broader point is whether you have the access to the funding that Rob's talking about or you're just simply paying for it yourself, it's a critical part of the planning process because underlying all of this, and you know, what we really should be emphasizing this morning is that word planning. Do the work, right? Do your due diligence. Be prepared. You know, prepare your business records, whether they're your financial statements, your remittances, whatever it may be. Have them all prepared because, again, we can't lose sight of the human element of this, right? When you're a small business owner, it's all consuming. It's all consuming. Day and night, all you're doing is working on that business. You are commonly not even giving a thought to what you're going to do with the business when you want to retire. But it's important that you do that because you'll be amazed how quickly, you know, 20, 30, however many years it is you want to work, goes by. And then you're of a certain age, I won't say a specific age, but you're of a certain age and you realize, oh boy, I don't want to be doing this much longer. But you've never given any consideration as to how you're going to transfer it to someone else. So the planning part of this, whether it's with a lawyer or with an accountant or just in, you know, preparing for that reality in the future is critically important. Because what Rob said this morning is absolutely right as well. Someone may come to you as a business owner and you've been starting to think about selling your business, and then you're at a position where you say, okay, I'm not ready to sell right now, but I could be in 1-2 years, whatever. They're probably not going to stick around and wait. Okay? So then you've lost potentially that transaction. So it's critically important to do these things. I'm not saying it's easy, because again, you're solely committed to the operation of this business that consumes basically all your time. It's not easy, but it's important. Okay? So all the important things are never easy, but the purpose for what we're talking about just now is, again, if there's any Simpsons fans, it all ties back to the taxes. So when you do the finger thing, it all ties back to taxes. So you want to engage professionals in order to structure your transaction in a way that's optimal in terms of the tax liability that you might be facing. Because again, you know, with some exceptions, you're doing this because you want to retire and you want a nest egg that will give you the ability to retire. So you want to retain as much of the value as you can in engaging in these services at, you know, really during the course of the operation of the business and making sure all your affairs are in order, but particularly when it's time to sell the business, retaining and engaging in these services are critically important. Okay, so tied into this, again, concept of tax efficiency. The higher a business's worth is the more likely the transfer will be tax-driven. And tax-driven is just kind of fancy language to indicate that your accountant is telling your lawyer how to arrange the purchase and sale so that you and possibly the buyer pay the minimum tax possible. So really, in the corporate work that I do, I tell my clients to engage an accountant from the get-go. Because a lot of this is going to be tied into how you have your business structured from the very beginning. What class of shares you've got, whether they're dividend paying, you know, a variety of factors that I commonly tell my clients to seek advice from an accountant on, because I'm just not in a position to give the best advice on that. But what you want to do when you're engaging the advice of an accountant, and normally your lawyer will know a few accountants and can recommend certain ones. I mean, there's one sitting in the room right now who also happens to be my accountant. But you want to ensure that whoever it is that you're retaining actually has expertise in the tax issues that you're thinking about, okay? You want to have that confidence because, you know, there are accountants, much like there are lawyers that do different areas of law, there are accountants that do different areas of accounting. So you want to ensure that your accountant has the requisite expertise in tax issues before proceeding with retaining their services. And that's something that you can do either through discussion with your lawyer who's recommending them or with a direct conversation with the accountant themselves. To put it bluntly, what you're trying to avoid is getting bad tax advice. Okay, so that's, again, those are valuation and tax considerations. Those are going to be factors in any one of these 4 elements that we're going to talk about. Okay, so those principles are going to be applicable no matter how you structure the transfer of your business. So I just wanted to basically go over, in again, a general sense, your 4 options when you are planning for business succession. So passing the business to a family member, selling the business to management or employees over time, over a set period of time, selling the business in one fell swoop to a third party, or passing on the business in your will. All right. Did I miss that? There we go. Okay, so when you are passing to family, and as Rob indicated, there are certain tax rules around this that are, depending on the nature of the transaction, increasingly complicated, but it is a possibility. So when you are selling or passing all or part of the business onto a family member, it can be a sale, it could be a gift, or it could be some combination of those two. So it is typically best, from my experience, for businesses to do a gradual transfer of either operational control or profit share. So this is driven in large part by determining who owns the shares in the company. Depending on the answer to that question, you might want to consider purchasing life insurance, because the more that shareholder's stake is worth, this might make more sense, because the life insurance policy is going to pay out directly to the beneficiary named on the life insurance policy, whether that's your successor in your succession planning or the company itself. And if it is the company itself, it could give the company the money to buy back the shares and keep the shares out of the estate. Because even though I indicated that that's one of the options available to you in terms of passing your shares through your estate, it's usually not the most optimal option available to you, but it is one that people pursue for their own personal reasons. So again, a gradual transfer can take place through either operational control, so basically handing over management over the company over a certain period of time, and that's of benefit to the company itself and its value, because you're retaining that relationship between you as the current business owner and introducing your successor gradually to your client base, so they can get to know that person, and in doing so you can hopefully retain some of the goodwill that's tied into the value of the company, and profit sharing, which is basically you as the business owner can maintain an interest by sharing in the profits. So basically that's a gradual payout for the value of your shares over time, and that's going to be beneficial particularly to, if it's a smaller company with a more limited cash flow and you're slowly paying out the current owner over time. That may be beneficial to you as the successor. So when you're engaged in, I have it under family succession, but it really is applicable to basically any kind of succession planning. There are some typical legal documents that you're going to see in any of these types of transactions. So when it's a corporation, you're going to normally have, if there's more than one shareholder, a unanimous shareholders agreement. So a unanimous shareholders agreement, by its very name, it's agreed upon by all the shareholders of the company, and it's going to dictate a variety of things, up to and including how the business can be transferred as between shareholders. So in the family context, if the shareholders are all family members, it will dictate how the shares can be distributed as between the shareholders. And it has, sometimes vaguely violent terminology like shotgun provisions and things of that nature, which dictate, how basically one shareholder can force the other shareholder to sell the company to them and that sort of thing. So that is something you're going to want to have in place at the front end of things, but it also comes into play at the back end of things, because that can dictate how you can transfer the shares in the company as between shareholders. There are also sometimes what are known as share freezes. These are rare, but I just want to identify them as an option to anyone engaged in succession planning. So basically the way a share freeze works is that the value of the share is frozen at a particular point, and the company eventually buys back the shares of the person selling the company at that value, and then basically cancels those shares once they've been bought and paid for. So that's, again, that's rare, but it's something that you should be aware of as a potential option depending on the circumstances of how you're going to transfer your company. There are also trusts. So trust is basically where shares are being held on behalf of someone else. That can be done for a variety of reasons. Basically, most commonly you'll see that if one of the shareholders is not of the age of majority yet, or the current business owner feels that they're not ready to own shares, even if they are of the age of majority, and then they're being held in trust for a certain period of time. And again, in terms of estate planning, sometimes we deal with shares either through a will, or a power of attorney can come into play if the shareholder has lost their capacity. So when you lose mental capacity, the power of attorney gives your attorney the power to manage your affairs with respect to a variety of pieces of property, whether it's real property like your home and that sort of thing, or personal assets such as bank accounts and sometimes shares. So depending on the situation that you're dealing with, because again, every situation is different, each set of facts is going to be unique to a particular set of circumstances, these are commonly the types of legal documents you're probably going to be engaged with, and things that you would want to speak to your lawyer and ask them about. So that's generally selling to a member of your family. You know, that is very broadly the types of legal elements that will go into that, and there are, as you know, were identified this morning, a variety of accounting elements that are going to go into that as well, which is beyond the scope of what I can give advice on. So sometimes as well, you are going to sell not to a family member or a third party, but to someone who's already affiliated with your business. So someone who's either an employee or part of the management of the company that you're running. So step one, from my experience, this is going to be a transaction that is discussed over time. Like, this is not something that's going to happen overnight. You are going to have a key employee or a manager who is going to say, I would like to own this business someday, and then step one in that process is you hash out the broad strokes of how the transfer would be structured and how the buyer is going to finance the purchase. Because that's critically important, because again, as was discussed this morning, there are a variety of requirements depending on the lender that you're dealing with in terms of the cash that you have to have available to purchase the finance, to qualify for, or to purchase the transaction in order to qualify for financing. So the purchase can be financed by a combination of, so you can basically, and you see this sometimes in larger companies, it's not as common in smaller companies, but you can have employee stock option plans. So basically you can issue an increasing number of stocks to your employees over time to the point that you are diluting the value of your stocks as the owner of the business and giving them more and more ownership in the company. So that's something that can progressively facilitate the transfer of a good portion of the business and then ultimately the whole business itself. You can also have a purchase and sale agreement, so that's just an agreement as between you as the business owner and your employee or manager, as the case may be, that will dictate the terms. And again, critical to that process is the valuation of the company, because that element is still going to be applicable to this type of transaction. You can have the unanimous shareholders agreement, so if your manager or employee is already a shareholder of the company, then you both are subject to the terms of the shareholders agreement, which will sometimes dictate how the transaction is going to be facilitated. It can also be part of their employment contract, okay? So their employment contract may itself contemplate them purchasing the company and how that would be facilitated. And when you are engaged in the transfer of a business, What you're always going to want to do, in speaking from the perspective of the business owner, is you're going to want to have both indemnity and releases signed by the person receiving the business, whether they're purchasing it or it's just being transferred to them. Because, as was talked about this morning, you can transfer the business, and then your successor could just, well, to put it bluntly, they could just make a real mess of things. And then there's CRA liability, there's various types of different liability. So you, as the person passing over the interest in the business, want to ensure that you are protected from that, because the purchaser has granted you both an indemnity and a release indicating that you will not be held liable for anything that they do after they take over the business. So what you want to do as well when you're engaged in this process is ensure that your estate planning documents, whether that's your will, any trust documents that might be in place, or your power of attorney, align with this deal that you've made, in whichever format that it takes, that this deal that you've made with your employee or senior manager is consistent, okay? Because you don't want to have a contract, whether, let's say, it's a purchase and sale agreement with your senior manager saying, I'm going to sell, X number of shares in this business for Y dollars, and then you have a will that says, I leave all my shares in my company to my son. That's going to create a mess. That's going to create a real mess. So you want to make sure that all of those documents line up, and obviously with good legal advice, they will. Okay, so we talked about the two, types of transactions where you're basically dealing with someone you already know. It's either a member of your family or it's someone you've presumably been working closely with for a significant period of time, to the point where they have developed such an interest in the business that they want to take it over. Here we're talking about someone that, you may know them personally on a personal level, but they haven't been engaged in your business in any way, shape, or form previously. They're an independent third party. So when you're selling to an independent third party, there are different factors at play, both on the selling side and on the purchasing side. But it requires, quite frankly, a different level of due diligence from both parties involved, because the person purchasing the business is not familiar with the business at all. They don't know how it's run. They're just an outsider that sees this as an opportunity, for whatever reason, to invest in a company or invest in a business because they think it'll be profitable. Or if they perceive that it's not currently profitable, they have some idea as to how they can make it profitable with some stroke of genius that they'll put on the business. So, I swear Rob and I didn't coordinate this, but I basically have the same advice as him. You have to be proactive. You have to make sure that your records are in order. So when you're selling your business to a third party, they are entitled to obviously engage in due diligence, and due diligence includes a review of all of these different types of records and documents. So they're going to want to see your minute book. So that's your constating basic incorporation documents, your shareholder ledgers, any agreements that, any unanimous shareholder agreements, for example, that are contained within the minute book. They are not only entitled to see those, but if they have any common sense, they're going to want to see those before they buy the business. So you, as a seller, want to make sure that those are in good order. They're going to want to see your accounting records, any employee agreements, obviously a list of all your assets and liabilities, so you want to make sure those are up to date. Because what you also want to avoid, this is, again, my lawyer brain thinking or speaking, but if you provide a list of assets and liabilities that's not accurate, and they buy the business on the basis of that list of assets and liabilities, and it turns out it's not accurate and they actually owe more money than they thought they did, they're going to sue you. Okay? So you want to avoid that situation. So any leases that may be in place, obviously any deeds, if there's any property owned by the business itself, any information about intellectual property, any debts, shareholder relations, so basically your shareholder ledger, so they can know who exactly owns shares in this company. Any tax returns that have been filed by the company, including any remittances. And sometimes, depending on the nature of your business, you may be engaged in a certain type of service where you're granting licenses to people. So, okay, if you develop a certain product and then you grant someone a license to use that product, obviously the person buying the company is going to want to see those licenses and know that they're in place. Because otherwise, if they don't know that they are in place and then they see someone using your product in a way that they think is not permitted, that could create an issue. But all of which is to say, these are, in broad strokes, a variety of documents that are going to need to be in order for you to properly convey your interest in a business to a third party. Otherwise, you're really going to have some issues in the process. So be proactive. And again, that's easy to say, because tying it back to what I said earlier, when you're a small business owner, you're kind of just plugging away, keeping the lights on, making sure everybody's paid, making sure your HST is remitted the way it should be. It's hard to lose sight of these, okay? But it's critically important when succession planning time comes. So try and stay on top of these as best you can. And obviously, with the assistance of a lawyer and accountant, they're there. I mean, you have to pay them, but they're there to help you and take that load off of you. So these are critical elements that will be applicable to any sale to a third party, bearing in mind that the overarching issues of tax efficiency and valuation are going to apply to this type of transaction as well. Okay, so the last one I wanted to touch on, because people do this, it might not be optimal in terms of either business or tax efficiency, but people do pass their interest in a business through their will. So it's something that you want to at least have a general knowledge of and give consideration to if you're planning to hand your business over to somebody. And as I've indicated here, this is really a mixed bag in terms of succession planning. So in the short term, you choose to deduct the costs of everything we just talked about. So you're just saying, okay, whatever interest I have in the business, someone else can have, I'll leave it to them in my will, and I don't have to do any of that. I don't have to talk to a lawyer. I don't have to prepare a purchase and sale agreement. I don't have to do any of those things. Basically, you're saying, here it is, good luck, right? So in that sense, not ideal, okay? Not ideal for, well, it's not going to impact you anymore. You're not around. But it's not ideal for the person that you're leaving it to. And obviously, if that's a family member, which it commonly is in a will, that you wouldn't want to put them in that position. And you're also sacrificing certainty and control, because obviously when you're engaged in the previous processes we were just talking about, you have a lot more control over how the process is undertaken. So again, there's minimal headache and expense for you in the here and now, which can be of value to you because, again, you're just trying to plug away and keep your business running. It can work well when your successor is clear. So that's commonly in the example you were asking about, where it's father-son, mother-daughter, whatever type of relationship, and that person has been working in the business with you and has a clear understanding of how it operates and how it should be operated. So the example being an only child who's been working in the company for years and knows what you know and knows how to run the business. So I don't mean to denigrate this completely. It can work, but there are a lot of downsides. So you may handicap the next generation's ability to run the company, and if the business is asset rich but cash poor, the tax bill. So again, Rob talked about this as well, but when the business is transferred through an estate, there's still a value affixed to that transfer, and that's fair market value. So you can leave your estate with what can end up being a crippling tax bill. And in fact, you can create an insolvency in your estate, okay? So that's not only going to create issues for the operation of your business, it's going to create issues of the broader administration of your estate. So this can create a lot of problems. And this is of some concern to people, and I certainly have any number of estate planning clients who want to micromanage even from beyond the grave. But you will have no control over what happens after you're gone. So if that's important to you, you're going to lose that benefit once you pass through a will. So again, a lot of downsides, probably not ideal in most situations, but it is something that can be done. And if it is a type of family situation, it can even be successful. So in this situation, so this is a spoiler for anyone who hasn't watched Succession yet. I know I keep coming back to Succession, but in the context of the show, this guy here is the oldest son. So because of that, because of the poor succession planning, Nothing's in place to clearly indicate who's supposed to take over this company. And so this very angry man feels that because he's the oldest son, he should be able to take over this company. And I'm not sure who's laughing, but someone's laughing at him apparently, because it's there in the subtitles. So it creates issues, obviously. So your beneficiary under your will, if you transfer under your will, is going to be stuck with all those decisions you didn't want to make. And as in fact happens in this show, you can have infighting between beneficiaries or with the company controlled by people who don't know or don't care about your business. So that's why while you're here, while you're living, while you have the ability to have some control over the process, it makes much more sense to engage in one of the first three options. But again, despite all the negative things I've said about it, I do have to tell you that leaving it under your will is an option as well. It makes for good television. So, final piece of advice, and it's an obvious one, and I've said it a few times already, but whichever option you want to pursue, whether it's leaving it to a family member while you're living, leaving it to an employee or senior manager, selling it to a third party, or leaving it in a will, it may be obvious, but you want legal advice on any of those, and you want to speak to an accountant, a seasoned tax accountant, about any of those options before making that final decision. So that's it. So this is the part where, obviously, if there's any questions, the whole purpose from my perspective was just to give a very general overview of some options that could be available to you. Every situation is going to be different. Every circumstance is going to be unique. But if there are some questions, then now's the time.
Sean,
Sorry.
go ahead.
Yeah.
Maybe expand, elaborate on the life insurance piece for passing the family versus just the estate piece.
Yep.
I was a little lost in
Yep.
timing on that.
So life insurance policies are interesting because when you purchase the policy, you name a beneficiary. And so again, that beneficiary can be either the business or someone you think might want to take over the business. So as a result of that life insurance policy is dealt with completely separate and apart from the estate process. So whatever beneficiary you name under that, they get, ideally, it sometimes takes a bit of time, but they get paid out directly. It doesn't have to flow through the administration of your estate. So that's why in certain circumstances, particularly if you want to name your company as the beneficiary of the life insurance policy so they can buy shares back, it makes sense to do that because it's completely separate and apart from your estate planning. Well, it's part of your estate planning, but it's separate and apart from the estate administration in that it's not part of the probate process. Okay, so it's a bit, quite frankly, it's a bit easier and cleaner.
So timeline-wise, there's wiggle room of a week or however long before it goes to probate that could be accomplished.
Well, it can be, you can file the claim under the life insurance policy basically within a day of the person passing away. Whereas probate can take significantly longer than that. I mean, for example, in the probate process, one of the fundamental delays is, you get your grant of probate, you then have to advertise that grant of probate in the Royal Gazette. And that advertisement period has to be for a period of 6 months. And really, you're not supposed to do anything with the assets of the estate during that 6 months because the whole idea of it is any creditors of the deceased are entitled to come forward and say, well, actually, in light of some of the things we've been talking about here, sometimes that creditor is CRA. They come forward and say, well, actually, they didn't remit their HST for 10 years and they owe CRA tens of thousands of dollars, right? So that is another way that the kind of estate process can kind of drag out the whole thing. Whereas with the life insurance and policy, again, subject to how quickly it can be processed by the life insurance company and how quickly they'll pay it out, it can be done more efficiently than through the estate process. Yeah. Anyone else? Yep.
Suppose if it's a partnership firm and
Yep.
Business is not running appropriately and it is just going downside over the period of time, and
Yep.
if we want to dissolve the company,
Yep.
then what is the procedure for that?
Well, that's a whole different thing. So that's winding up a company.
Yeah.
So that's basically everyone involved saying, wow, this is not going well, right? And we all want to get out of this. So you can wind up a company. There could still be tax liabilities for that because if there's outstanding taxes, outstanding remittances, outstanding any number of things that you have to pay to CRA, those do not disappear just because you're winding up the company, okay? And if you are a director of the company, you may be personally liable for those things. Okay? So it's not as though you can just escape that by just saying, well, this didn't work out, I'm going to wind up this company and go on with my life. It's not quite that simple, but that is what would commonly be contemplated in that circumstance. But you'd have to seek advice on your particular situation, because again, if there's those debts owing, it might not be that simple. Yep, that happens, yep.
Maybe I'll just jump in with the last question before our next guest, but
Yep.
you mentioned a transition
Yep.
where you could have someone take over business over a period of time.
Yep.
What kind of protections might you have for the parties in that?
So that's a good question. So basically, that's where those indemnities and liabilities would come in, right? And that can be contemplated in, if the senior manager or employee is already a shareholder in the company. It can be contemplated in the unanimous shareholders agreement. So it can be contemplated that, over X period of time, X number of shares will be transferred, but, Y party is granted an indemnity for any actions of the other party. Because that principle remains, whether it's a gradual transfer or if it's just a one-off transaction. You, as the party transferring your interest, you want that protection. So as part of your legal advice, what they should be advising you is, here's how to do that, and commonly that's through either an indemnity from the other party or just them signing a release saying, I will not hold you liable for basically anything that I do. Yeah.
Yeah, which is very likely, right?
What's that?
Which is very likely, right?
Yes.
Yeah.
Yeah. Yes, exactly. So thanks for taking the time this morning to hear me speak about this. I was glad to have
Round
the
of applause
opportunity.
for Sean. And Sean will be here for a little bit. We've got some more treats over there that hopefully everyone can take part on, and a little bit of a networking session at the end.
Yep.
So thank you very much. I do
you.
want to just mention our sponsors today. We've got the Cape Breton Regional Chamber of Commerce that is representing the business side of this discussion, and the Island Sandbox here at Cape Breton University. And we work with primarily with students and are happy to talk to anyone and provide any guidance, and of course putting students or people onto the right advice is part of that. So if anybody has any later questions after these sessions, you can contact the Chamber, you can contact the Sandbox. And again, I'd like to thank Cape Breton University for giving us the space and hosting us here this morning. So thank you very much. We're going to go to a quick changeover and change over speakers. So if you want a little refreshment, it's just off there at the side, and we'll be back in a few minutes.
Test, 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 test. You hear that? That's on? Okay.
Okay, we're almost ready to come back here. We have Chris Kalanko with Labor Skills and Immigration. And he's going to be talking about issues regarding permanent residency for parties interested in purchasing or investing in a business. So with that, we're going to hand the floor over to Chris. Thank you very much.
Hello, everyone. First off, I'd like to say thank you to Jenna and Todd for inviting Labor Skills and Immigration here today to talk about entrepreneur immigration streams in Nova Scotia, Invest in Succession session. So first, what I'm going to do, just to go over the agenda here. So first, I'm going to introduce the Immigration and Population Growth Team with Labor Skills and Immigration. I'm briefly going to go over some demographic statistics, landings in Nova Scotia, landings by county. I'm going to go over recently Labor Skills and Immigration, how we attract newcomers to the province. We're going through a brand shift right now, so I'm going to go over what some of the new brand is, and then finally give a brief overview on our immigration streams. We have the Atlantic Immigration Pilot and our nomination streams, and then more specifically, we have two entrepreneur streams where aspiring senior business managers, entrepreneurs, or international graduates can participate in these streams. So this is our lovely team for attraction and engagement. The people at the bottom, that's us, that's our community navigators across the province. We each represent a different territory. We all have slightly different roles, as many of you are probably aware. The resources that exist in Nova Scotia for newcomers are different in Yarmouth County than they are in Halifax, than they are in Cape Breton. So our job is basically, we are a first touch point, for example, when our recruiters go abroad and they talk to potential newcomers. We'll reach out to inform them on our programs, inform them on resources in our communities, and try and find out what those gaps are, communicate those gaps to our partners and to our senior leadership so that we can try and fill those gaps. Our senior engagement specialists, Leanne Bartlett and David Savette. David is involved in Acadian and French settlement in Nova Scotia and the engagement plan there. Leanne, any employer in Cape Breton who has dealt with LSI over the past 15 years probably knows Leanne very well. She's been with us for quite a long time. We have two marketing advisors. Erica Ormiston is also a marketing advisor, the community navigator for Halifax. That's a dual role because anyone who lives in Halifax understands that community has a lot of resource. They have ISANs, they have a lot of different cultural communities, a lot more resource than, say, Margaree or Digby. So, like I said, the role is different based on the navigator. So basically, Nova Scotia in 2022 had a record-breaking year. We had 12,650 landings across the province. A landing is defined as someone who comes as a permanent resident, so that does not include people who are here on a work permit or students who are on a student visa. We also had interprovincial migration of 14,700, so that puts us at about a population growth at about 25,000, which puts us on our target of reaching a population of 2 million by 2060. And like Todd so aptly mentioned in his demographic chart, the reason for the push for immigration is because with the baby boomer generation retiring, we just do not have enough people to fill those jobs and those spots. And you know, on first glance, people might say, oh, there's a labor shortage. Great, there's a lot of available jobs. But if you're a business owner and you can't fill those positions, then that could mean having to shut your doors. So we want to be able to communicate our programs to newcomers and also to business owners so that they can use our immigration streams with the province to fill labor needs. So you can see this is just a chart of landings by county. Cape Breton had a total of 800 landings in 4 different counties. Most of our landings are right here in Cape Breton County, so 680 out of 800. And second, we would have, I think we have 65 landings in Inverness County, and then a little lower in Victoria and Richmond County.
But these are permanent residents, sorry.
Yeah,
They already have their permanent resident status.
well, so a landing would be, so say somebody has been here for 5 years, they get their permanent residence, when they get their permanent resident, that's when they're counted as landed. That's a landed immigrant. No. So I'd like to repeat what our 2 previous speakers, Rob and Sean, mentioned. Planning is extremely important when it comes to using the immigration system. It's not a thrifty system. It's not something you can say, oh, I need to fill this job. I'll call LSI. Maybe they can help me within 2 weeks. It takes a long time to go through that process. There's 2 levels of government that have to be navigated. So part of our brand in Nova Scotia is we realize that we have to stand out because there's a lot of global competition. There's a lot of regions of the world that are experiencing the same demographic challenges we are, with a big bubble of population in the baby boomer generation and lower amounts of population in other age groups. So despite some of what we think is very unique about Nova Scotia, this is what's being marketed by other countries. Like recently we went to Emigrati Beurs, and Finland, for example, had a booth where you could sit down like you're in a virtual camping with VR. Just an incredible experience. Apparently I wasn't there, but they had told me about it. And one of our major attractions before was, you know, a very relaxed lifestyle with lots of places to live and affordable housing. And as many of you know, that's disappearing. We have less unaffordable housing than the rest of the country, but it's getting worse. And also, we want to attract immigrants and migrants who will thrive here and who will want to stay here. So that's kind of the mix of what we were trying to accomplish with our brand. So basically, our new marketing strategy is based on 4 pillars. It's based on economic opportunity. It's based on the fact that we have welcoming communities here in Nova Scotia, and especially Cape Breton, in my opinion. You're never more than 45 minutes away from the ocean, no matter where you live in this province, which is a great draw. And with the nature of work these days, with a lot of work being able to be done virtually, there's more of a choice in communities where people can live. Some people want to live in a very rural lifestyle. Some people want to live in an urban lifestyle. So Nova Scotia has both. Many of you who know and live here in CBRM, we have kind of a mix of a rural and urban center where you can, you know, put your kids in sports for a little cheaper and commute less than you would if you lived in a larger center like Toronto or Montreal, for example. So these are draws that we're using to bring people in. So we want to be known as the most welcoming destination in Canada. Obviously, as a government agency, we communicate this to the business community and to international students because we want you to kind of emulate that and also be welcoming to newcomers. And our corporate strategy is that everyone has an opportunity to thrive, and government will work as a trusted partner with employers and newcomers to try and overcome those challenges to create a vibrant business community in Nova Scotia. So these are some of our new brand identities that we take when we go to recruitment events, either nationally or internationally. As you can see, the international one, it's very similar. Anyone who knows the Tourism Nova Scotia brand, it incorporates the Canadian flag because that's a very valuable asset when we recruit internationally. Whereas when we recruit nationally, the Nova Scotia flag it stands out for other Canadians. So, go back there. So this was this is a picture of our booth at Emigrati Beurs in the Netherlands recently in April where we went. So these are the types of visuals, and these are the types of displays that we need to attract people. In 2022, we went to 23 recruitment events outside of Nova Scotia. 23 were in person, 3 were virtual. We gathered over 7,700 contacts of people interested in relocating to Nova Scotia. So for example, somebody could come up to our booth and say, I'm a school teacher, I speak French, what opportunities are there for me? So as a government agency, we don't place people directly into jobs, but we can say, well, if you want to be a teacher, this is how you get accredited in Nova Scotia, this is a list of schools, this is where they advertise for jobs and so forth. But as business owners, you're able to participate as well in these sessions. You're welcome to join us on these sessions. Or if you have a position that you're having trouble filling and you would just like to send the job with us, then when we talk to newcomers abroad, we can present this job to potential newcomers, and you can receive applications that way. If you're ever interested in participating in any of those events, you can feel free to reach out to me. Unfortunately, I don't have my contact details, sorry, on my last slide, but I do have business cards that you're welcome to grab there if that would interest you as well. In 2023, we've done 10 so far. And we're in the process of planning our fall, so we don't really know exactly where we're going in the fall yet. So now would be a good time if you were interested in piggybacking on any of our events. And as you can see, the events are very sector specific. So we'll go to like a healthcare recruiting fair, we'll go to fairs for physicians, some for the construction sector and so forth. So they're typically all over the world. Some are in Calgary, or in Toronto, as you can see there. A second initiative that we're undergoing right now is an international student campaign. So our target audience for this campaign is Nova Scotia employers who are inexperienced in hiring international students, and also employers who are struggling to fill positions and meet their labor needs. What we've done in the past is we've spent a lot of time communicating to international students. This is what you need to put on your resume. This is how you go and pursue a job in Canada. What we haven't been doing well as a government agency is communicating to the business community the value of hiring international students. As Todd mentioned, there was over 1,000 graduates, international students, in Cape Breton last year. These are very highly skilled, highly educated people who could potentially benefit your business. So we want to create an event where, or a campaign that kind of matches those two together, so you're able to access more of a labor pool. The campaign theme is missing out. Anyone who's heard the expression FOMO, or fear of missing out, is kind of the way that we're going to advertise this. And the idea focuses on, maybe a business wasn't aware that type of talent exists locally within the international student community. So we want to create campaigns that kind of make international students and the business community aware of each other. And this is some of the, on the left, you can see the concept. So these are some things you'll see maybe at bus stops, on billboards, and things like that. And on the right is some of the photography that our campaign team took for that. So that's, and I believe that will launch, this campaign will launch in January. That campaign launch in January, and stay tuned. LSI is working with CBU and other post-secondary institutions across the province to help roll this out. If anyone would like to participate in that, or would like to know more or stay in the loop, feel free to reach out to me, and I'll make sure that you're included in that. So that's kind of the preamble to immigration to Nova Scotia. I'm going to give kind of a Cole's Notes. A lot of this, some of you may already know, but for those that don't, I'm going to try and break it down as simple as possible. So basically, immigration in Canada, there's two levels of government that would be involved. The provincial government would have some say into who gets nominated to come to the province. So economic immigrants, for example. So we can nominate or endorse candidates who contribute to our labor market and economy. So think healthcare workers, or the Atlantic Immigration Pilot, or nominee programs. And then once they go through our vetting process, then the candidate is able to apply to the federal government for their final either work visa, study visa, or their PR. At the provincial level, there are never any fees to participate in any of our programs. So if you are a business wanting to participate in the AIP, if you are an international student who is going to participate in the nominee program, there's no fees associated with our programs. You may, as you'll see later, incur fees in net worth verifiers if you're in the entrepreneur stream, or if you hire a regulated immigration consultant, you may incur some fees, but there's no fees to apply to our programs at the provincial level. So if anyone is stating a fee to get into the AIP or to the nominee process, it's there are no provincial fees for that. So the Atlantic Immigration Program used to be a pilot. It's now a permanent program. It's an employer-led process. So basically, an employer who has been operating in Nova Scotia for 2 years and has had consistent management over 2 years. And when we talk about succession planning, so for example, if you just purchased a business that's been in operation for 50 years, but you're a brand new manager, you're ineligible to participate in the AIP for at least 2 years. And this is to prevent somebody from being able to come in and buy a business and then use that business for immigration purposes. So that's the the 35,000-foot view of what's required to be designated. Obviously, you have to be in compliance with labor standards, occupational health and safety. So that's employer-led. So you would apply to us for designation. You would become designated, and then you're able to endorse a position that you're looking to fill with your company and offer a job to a potential candidate. Once that is approved, your candidate receives what's called an endorsement certificate. The candidate would then take that certificate, apply to the federal government for their PR and their work permit. Obviously, anyone who's an international student, as an LSI community navigator, we can't advise. The only thing I can say is always make sure your federal work permits or your study permits are all within status. We can't process anything that when you're not in status. So then once you apply for PR, you would wait, and then you would get PR that way. The second process is the Nova Scotia nominee program. This is candidate-led, and as you'll see in the next slide, there's 9 different streams that this program helps. There's the physician stream, skilled worker stream, occupations in demand, and these streams are constantly evolving and changing depending on the labor needs of the province. So for example, the occupations in demand stream, right now it would be like nurse aides, so like CCAs, truck drivers, and so forth. So they have a special stream that they would apply to with specific criteria. Skilled worker stream would have their own, and as I'll talk about next, the entrepreneur stream also has their own requirements. So once that nomination application fits all of the approved criteria, that candidate gets a nomination certificate similar to the AIP, and then they're able to apply to IRCC, which is the federal body, for their PR. It's possible that a candidate can get a nomination certificate through the province, then apply to the federal government and be turned down. We don't have any control over the federal government and how they approve candidates. So it's not a guarantee that if you have a nomination certificate that you will be approved for a PR. As you can see, those are the nominee programs for Nova Scotia. I'll talk a little bit more about the International Grad Entrepreneur and the Entrepreneur. Slightly different eligibility criteria for those programs. These programs are in agreement with the federal government. There's some flexibility and autonomy within these programs. And like I mentioned, we continually evolve these programs based on labor market needs. And in the nominee program, the candidate leads this application process. There's nothing that you would have to do as a business other than make sure that the person you hire has a valid work permit for Canada. Once they're working for your organization for a certain amount of time, then they're able to apply for nomination. So the entrepreneur stream. So this is basically a stream that was provided for owners or senior business managers who maybe have come to Nova Scotia, they really like it here, they want to invest in our business community and live in Nova Scotia. So there are quite a few requirements to participate in this program. For example, somebody couldn't invest in a business from Ontario, live in Ontario, and just have a majority stake but not be involved in the day-to-day operation and receive PR. I use Ontario, but I should use something from outside of Canada. But the person has to actually intend to settle in Nova Scotia and operate the business for a minimum of 1 year. So the minimum eligibility for a potential entrepreneur coming to use our entrepreneur stream is a net worth of 600,000 Canadian. You'll see on the application portal on novascotiaimmigration.ca that this is verified through a net income verifier like KPMG, for example. And the stipulations around how much experience this person will have had to have in business management or business ownership experience is listed there. They have to have a CLB, which is a Canadian language benchmark score of 5 in all 4 language abilities, which is reading, writing, speaking, and listening. Their high school diploma has to be verified through an education credential assessment, and the investment in the Canadian business has to be a minimum of $150,000. And of course, they have to agree to reside in Nova Scotia. So this is for any person who, this is not specific to international graduates. This is the general requirements for the entrepreneur stream, typically for people who live outside of Canada and who are coming in. And the international graduate stream is a PR pathway for individuals who have graduated from a recognized Nova Scotia University or Nova Scotia Community College, and the program was at least 2 years full-time. Now, in this case, they can start or acquire a business in Nova Scotia. They have to operate the business for a minimum of 1 year before they are able to apply through this program, and they have to intend to settle in Nova Scotia permanently. So for the international graduate entrepreneur, yes?
I just have a question.
Sure.
That last.
Sure.
So the school, they don't need that 600,000.
No.
They need to be
No.
in the program.
Yeah, that's the difference in eligibility, and I'll just get to that in a second here. So for the international graduate entrepreneur, they have to have a post-grad work permit. A post-grad work permit allows an international graduate to work as a self-employed person. So somebody on a closed work permit, for example, or even an open work permit would not be eligible for this stream. They would have to be on a post-grad work permit. We understand this is very restrictive because the post-grad work permit, I believe, it's a federal work permit. It's a 3-year work permit.
Up to 2 years. It could be up to 2 years. It could change. Like it could be like a few months. It could be
Okay.
a couple years. It could be a year or two. Up to 2 years.
So as part of this process, there has to be a review of your financial statement. So the business has to be shown to be generating a healthy income. It has to be shown to be employing at least one person who's a non-family member, who's a permanent resident or citizen of Canada. And we understand it's tough to start a business and be in positive, a healthy financial situation within the 3-year window. And should, say for example, everything works out, the international grad gets to a point where they have 6 months left on their post-grad work permit, they can talk to our office about sending a letter to be able to, like we will include a letter that you can send to the federal government to extend that work permit, saying that they're participating in this International Graduate Entrepreneur Program. And that's all I have today. So are there any questions about any of that? Yes?
Does the employer have to be a year old for the experience class? Does the employer have to apply for the experience class?
So like you mean as a skilled worker, or the experience?
After doing a year or as an
Mhm.
employee, if someone buy a business
Right.
and someone is working already there, they have like almost 3 months left to have a 1-year experience.
Right. So yeah, so that's the other thing about international graduates is there's so many other pathways for international graduates to become PRs. So if you have already been working for say 9 months and you're only 3 months away from meeting the requirement of another stream, and then you apply for your permanent residency, say through express entry or skilled worker, once you get that PR, then there's no restriction in opening a business. You're already a PR, you have the same tax rights as any other PR. So you wouldn't have to go through that process then? It's a good question.
I think students, international students that are coming into Canada to study are sort of well versed in the PR permanent residency process.
Right.
And maybe the different levels, there's level A, B, and C, different job types.
Right.
But local employers may not understand that completely because they're not dealing with the
Right.
day-to-day. Maybe you could just briefly go over the job classification
Okay.
requirements and the level of job that would apply or qualify for permanent residency. And
So, okay, that's a great question. So what I'll go back to is the Atlantic Immigration Program, for example. So many of you may be familiar with NOC codes. They used to have the NOC A. Well, that's all changed now. It's now tier codes, TEER. And trying to learn that, I shed a few tears. Sorry. But tier 0 essentially would be your management type jobs, and tier 5 would be, like your lower skilled jobs. The Atlantic Immigration Program only accepts tier 0, 1, 2, 3, 4. So you would have to be a certain skill level to participate in this process. An international graduate, for example, doesn't have to show their work experience in their home country if they are an international grad, that they're able to apply through this process so long as they lived in Nova Scotia for 16 months and are working for a Nova Scotia employer. For our other programs, like Todd mentioned, through the nomination program, it's all different depending on the stream. So for example, I mentioned tier 5 is ineligible for AIP. It is eligible for some occupations in demand. So for example, light duty cleaners would be eligible under this stream. And like I mentioned, these occupations and these tiers can be found on novascotiaimmigration.ca, and it lays out exactly the criteria for each program because it is very, very different. International graduates in demand, for example, which is different than occupations in demand, would include ECEs who graduated in the province, and it would also include, I believe, nurse aides as well, or CCAs. Will be under the tier system. They're called nurse aides. So yeah, so every program, the tier of job really depends. If you have a specific question about an international hire you have and what the process is for them, feel free to reach out to me. I can't advise you on what to do with somebody who's working for your company, but I can say these are all the programs, Mr. and Mrs. Business Owner, that they may be able to apply for PR through. But yeah, so that's it's a very nuanced question because there's such a variety in all our programs.
very good. Okay. So Chris is going to be hanging around, I think, after our final presentation for a few moments. If anyone has any questions for Chris or Sean at the end? No?
No,
Maybe not? Oh, another meeting. Okay. So grab him in the middle of the break if you have any other questions. We're going to take a quick moment here to switch over and bring on our panel to talk about their experiencing in secession and transitioning. I'd like to give another thank you, a nice round of applause for Chris. And again, I thank you all very much. We're going to have a quick turnover and be back for our final panel session. Thank you. These are cool.
These are awesome.
They're blue.
So you took over. Nice. Good, eh? How long have you been? So did you start it? Yeah. You did? And so the pizza place still there?
Separate business, separate
Yeah,
stores.
that's what I thought.
And the meat store, I still work.
You still with what?
I still have the meat store. I had two businesses. Sold one. JP. Tony. Langwa.
Lori. Latimer. Merlin. Lori Latimer, Merlin. Yeah. But that's okay. Lori Latimer's fine. I prefer that actually, but my husband doesn't.
He's not here.
No, exactly.
Okay, so time to open up our session to story time. Yay! And we've got a couple of guests here. Lori Latimer Merlin is our first guest. She is the former owner of the Ugly Mug. Tony Langwa and Jagdeep are the former, current, former transitioning owners of Tony's Bakery. And our guests have had some experience going through this process, and I'd like to, maybe open this up with thanking everyone for coming. I'll mention our supporting partners here, the Cape Breton Regional Chamber of Commerce, Cape Breton University, and the Island Sandbox. Before we head into this, if there's any business owners that have any questions, I encourage you to contact the Chamber. Any students that are thinking about maybe getting involved in this process, come visit me in the Sandbox. My office is located across from the library, and I'll be very glad to provide you whatever assistance I can. And sort of like the dating game, maybe we can make some matches. Maybe we can make a love connection here. I'll start on the end with Lori. And just asking your story, in the process of deciding that you might want to potentially sell your business, Can you tell me about that process? Tell me about that period of time in your life when you were looking at selling your business.
Well, first, I'd like to say you guys are so fortunate to have this information session because it would have really helped us. Like, I think we learned a lot, but we did a lot right when I was looking at stuff. But again, I had Rob but basically, I started succession planning when I started the business because I knew I wanted to retire in 10 years. So my goal was start a business, make a profit, and sell a business. That was mine and my business partner, Tracy. We had a partnership. I worked for the government, I worked nonprofit, I worked private. We decided to start a business. She was a teacher, couldn't get work. So she figured by the 10-year mark, which was perfect, the doors would be opening for teaching and my doors would be opening for retirement. So I literally started succession planning right away.
That would be rare, and that's good advice.
That's very rare.
Very good advice. No business lasts forever.
Right.
And of course, people move on, transition their lives. So having the foresight to think that far ahead is unique.
Right. Well, I had a father who was in business, so he was very, very. I guess he was my mentor, and gave us some really good advice. And that was it. Lori, how long do you plan on being in business? This is what you need to do, and this is how it has to go. So a mentor is key, I believe, for starting businesses. You need somebody who's been there and done it and can give you advice. And his best advice, he said to me, was get a bookkeeper. First thing he said, do not do the books yourself. I know you think you can do it, but a bookkeeper will keep you on target. And I can't stress that enough. It really did.
Awesome. Great.
So I was fortunate. I had somebody that had sort of paved the way for us, but we did start it from start to finish. We knew nothing. You work hard. You can attest to that. It's a lot of work, but it's a passion. And your biggest thing is if you believe in your business, you'll sell your business, but you do have to have these other strategies in place.
Yeah.
Yeah.
Maybe-
It's your baby.
Yeah, it is. Yeah, you're giving birth and
Yeah.
yeah. Maybe you could ask Tony. I know we had a conversation a couple of weeks ago, and you noted at that point a fondness for golf. Maybe you could tell me about your story in starting your business and ultimately deciding that you wanted to do some other things with your life.
For sure, I'm not a good golfer for starters. Just starting the business, I was 26 years old when I started my business, so I didn't have any plans for success for selling the business. Actually, I was on a Freedom 75. Right, that's how I figured I was going to be working until I was 75. It's been 2 years ago, Jay Deep just approached me and asked me to buy the business, and at the time, I wasn't really interested. Because I still had a lot of bills to pay and a lot of debt, and then actually COVID came along, and for me as a small business, it's helped me tremendously. Sales were up over the last 3 years, 20%, over and over each year. So I had all my debts paid off, I had everything done. He had asked me to sell, and I thought the time was right because I wanted to get out and golf and do something. Our business is 24/7. So we work Christmas Day. I'm in there 5-6 hours working. Bakery, that's the busiest time of the year. So I just said it's time to do something else in life.
Yeah.
And so, like I said, have 20 rounds in already this year, and I never golfed 20 times in the last 5 years. Right?
So just I hadn't mentioned it. With Tony's Bakery, you operate a Needs franchise and you have
Yeah,
a bakery.
I had two businesses,
So
so
there's a
two
paired number of businesses there.
Yeah,
And,
so I still operate the Needs business. So I'm in the same building with Jay. So if he needs anything, he just asks me. We're there all the time
Yeah.
together, and so he's working hard at it, and it's working. It's going good.
Yeah. So, Jag, you came in, I guess, as an international student originally, as a lot of the all of the international students from Cape Breton University do, and you got a job. And what made you start thinking about potentially taking this business over? What was your thought process there?
So I started here first. I want to be an electric engineer. Then I did 2-year diploma, and then I started my permanent residence process. And then I was working in Walmart before starting the bakery. Then I started in the bakery, and I really like working there. And I don't like 9-to-5 jobs because I always try to be on time in Walmart, and I always get late, like 5 minutes late. And so
But I was a good worker, right? That's why my manager was not saying anything to me. So, on that time, I realized that no, I want to start my own business. And it's super hard to decide where you want to go. And then I start working in the bakery. And one time I heard from Tony, I know he was joking, I think, on that time, I want to retire. And I took it seriously. Like maybe he want to retire. So I gave him an offer, I want to buy that. So I say, I still have some time left, I want to get my permanent residence first, right? And then I got my permanent residence, and then I offer him again, and then how it start from there.
Yeah, yeah. So that process of going from employer to owner, what in that process was probably, maybe I'll use the word most surprising, or something you learned in that process?
So, that's what you mean, like from employee to employer?
Yeah.
So, when I was working with Tony, I was thinking there's very super less work as an employer. You don't have anything to do, right? But now I realize you have a lot to do. Because it's not you have to work, you always keep thinking about the sales and about the ordering stuff, what you have to order. As an employee, you work only 8 hours and go sleep without any tension, without any worry, right? But as an employer, you can get call around 1, around 12. Sometime I got call around 11. Oh, that is not working. Oh, that happened. Then you have to wake and back to bakery at 11. So that's what I was thinking, like it's super easy as an employer, but it's not.
Maybe I could ask Tony the same question. So in this transition process, was there something that you've learned along the way, or something that surprised you and you've had to sort of think about that you hadn't considered before?
There wasn't a lot. I just didn't realize how much time I was actually there. Because I have a lot more time now. I can leave early, do stuff. I'm home for supper. Usually I was heating it up in the microwave at 7 or 8 o'clock at night when I get home. So it's just, I wish I would have did it long ago, actually.
Yeah,
So
yeah,
it's just like I started when 33 years, and like I said, 7 days a week pretty well. You know, you can't get a 2-week vacation now. If I want to go this summer, I could take a 2 weeks vacation, but before I couldn't.
So you've gained a lifestyle in the process.
For
though.
sure, yeah.
Yeah.
And I mean, I'm only 58, so I figure this is the time, and
Yeah.
just while you're able to do something with health, and you know, it's good.
Lori, same question. And you sold the Ugly Mug 2 years ago?
A year and a half ago.
Year and a
yeah.
half ago, yeah. So a little bit of distance now, but
Yeah.
what might you have learned in that process?
Well, I sold to an international student as well, sang, and we were really worried about a language barrier and how our customers would perceive sang, because Tracy and I, same thing. You become the face of the company. So we worked every day, everybody knew us, so I really was surprised at how well the transition came over as far as them accepting sang, and my staff, we were lucky, he kept the same staff, so we kept the environment the same. So that 3-month period working alongside of him was probably one of our our best success, because he learned not only about the company and all the stuff that you get called at in the middle of the night, or you're on vacation and the alarm's going off. You learn about people. Like we had our biggest success was our goodwill. So we made sure that continued, because when I'm gone, that needs to continue. So I think that was probably our best decision we made as a group when we sat down. And then the negative would be things you just forget about, like transferring over your suppliers, that kind of stuff. But that was sort of like anything, you learn that as you go. But as far as that, I mean, our place is probably busier, just as busy, if not busier, than when I was there. So that's great.
And I think you even answered some of my next question, but you might want to elaborate. I was going to ask about that transition process. Was there a plan in place you had for the new owners to come in, and what time period?
Yeah.
How did you think about that?
So what we did is we sat down. When we went to sell our business, we let people know point blank how we felt it was going to work, and you need to be hands-on. I believe that. From a distance, it's really hard. I think you need to find out what works, what doesn't work, know your client base. So we basically sat with Sang. We agreed on 35 hours a week for a 3-month period. and we showed him everything that we did, and he brought in a couple of people that he would like to have trained, so it worked out really well. And my staff were very open to it. Keeping your staff was huge because they know the ropes, they know the product. So yeah, basically we just worked out what worked well. I mean, some days we were there at 6 o'clock in the morning. Sometimes we would be going over books at 9 at night. It depended on our schedules, but we wanted to make sure it was in place for him.
And staff being so important, how did you package that transition with your staff? Like, what part of that plan?
We had a staff meeting. We advised them that, you know, Tracy and I only had the best interest of our staff in place. So that helped. We made it sure that when we sold the business, we marketed our staffing. So we basically sat with them and said, this is who's taking over. This is good. We're not leaving tomorrow. This is the transition. He wants to keep everybody employed. He's going to meet with you individually. So I think that gave him a sense of, it gave them a sense of no one was giving up on them. They weren't losing their jobs. So we sat together a lot as a team. So Sang and I and Tracy sat together and we met with the staff and said, what are your expectations? Do you plan on staying? That type of thing. And it transitioned really well.
Very good.
Yeah, a lot of communication.
And communication being very key. So Tony and Jag, you are in the middle of your transition, I think. How is that going? What's your...
Well, it's finalized and everything. Like,
Oh, okay.
As of March 6th, everything was finalized, but I'm still, it's a little different situation. I'm still at the store to help him daily with anything that he needs, and, you know, any questions he has or any help he needs, or if a new product or where to buy something that he can't get from a current supplier, stuff like that. Like, he's got to learn all that. It's going to take a while to learn all that process. And yeah, it's the same thing. All the staff, same staff that were there. There were some with me over 20 years. They're still there, so they all have the experience of, you know, of doing all the products and not the baking and all that part of it, right?
Yeah.
And he's just learning the process about running the business. Right? Suppliers, and that's an issue with supply chains now and everything. It's a lot. It's harder now, and price increases and everything. So he had some challenges with that.
Yeah. So Jag, you're coming in as an immigrant, a new Canadian, and taking over a business. So what is it about operating a business in Canada that might be different than you expected from maybe where you were originally, I don't know if you're in business in India, but what you would have experienced in business in India?
I think it's little difficult here than in India, because you have to, like, you don't have that many options as a suppliers that as compared to India if you compare. But like but everything goes by steps here, right? You have to register for everything before you open. In India, yeah, you can open way easier than here. But the only thing I'm struggling sometimes is the suppliers and the prices because of the inflation. So what I think, if I can succeed in this recession, so I can succeed later too.
Yeah.
Because that's the most difficult time right now.
We've got an interesting economic situation in that we're coming out of COVID, maybe one of the worst times in business for most businesses, except for Tony's apparently.
Yeah.
The only one in Canada that was.
A lot of the small pizza shops, nobody wanted to.
Exactly. Yeah.
Nobody wanted to go to the bigger stores, and that's how it started. We had lines outside our store.
Oh, okay.
People
Yeah.
want to go to the grocery stores, the Walmarts, the large stores.
Yeah.
You know, now it's not a big deal, but at the time, everybody was scared to go to the bigger places.
Yeah. And transitioning out of that situation into a new situation with restricted suppliers, perhaps, and supply chains and lines that are maybe a little less predictable. So you've got an interesting conundrum. You're walking into what is a new situation for, I think, a lot of Canadians in this economic environment. Maybe I'll go back to Laurie for a sec. And so the next question I have is, it refers to the business as itself. We talked a little earlier, I think, both on the accounting and legal side about separating your personal business or your personal affairs from the business, which I think over time, or in many cases, businesses kind of put together. But in looking at the business itself, what was the biggest asset you had in the business when you looked to sell it? What was the most important factor in selling your business?
Probably our goodwill, our name, our customers, our name was huge. Our branding was really done well. Also, our recipes, our clients, basically our customers,
Yeah.
right? That was our biggest selling point. I mean, yes, you had your assets, but everybody has assets, right? Our location, I think all that was key in selling. So that to me was probably, well, actually, when I sold my business, I got more money because of goodwill,
Yeah.
and it wasn't necessarily my assets.
And those aren't things that end up on the balance sheet in many cases,
No.
but those were
Ask
the
Rob,
deciding
we argue
factors.
over those things. Me and Rob, he's not here. I'm like, Rob, my business is worth more than that. Because they look at numbers, so you need to look at the other parts too. Like, it was so hard because when you're negotiating with lawyers and sorry, with lawyers and accountants, they look at the black and the white and the numbers and whereas you really need to tell them this is what we're worth.
Yeah.
And that is what we did.
Yeah, and the Ugly Mug did have, currently still has a great customer base
Yeah.
and a good reputation, and that's transitioned nicely. I've seen
Thank
exactly.
you. Yeah, that's what we wanted. People say to me, Lori, are you upset that the Ugly Mug is doing well? I'm like, am I upset? I want them to franchise the Ugly Mug. Like, that's not upsetting. That's how it should work.
Yeah.
But I think in some of our mindset in Cape Breton is different in that way. And I think that really has to change among employers and definitely among employers. Would you agree? Yeah.
Yeah, yeah. So Tony, again, that question. So what was the most valuable asset or the most valuable thing that you had when you looked at evaluating the business and looking to sell it?
Again, the name. After 33 years, you build up a customer base, and a lot of suppliers, caterers, and everything that we supplied over the years. And then again, the increase in sales over the last 3 years, I think, was the biggest thing to show that, and right now it's higher than it was last year at this time.
Yeah.
So it's still increasing, right? So the business is going forward, not like some business that decline.
Yeah.
So that was one of the biggest things I think that helped, change it over to him, to show him where the sales were higher.
Yeah. So, and Jag, same question. What was the most important thing when you looked at evaluating? You worked in this business, so you were probably more intimate than you would be if you're just an outside, purchaser coming in. But what did you look at? What was important to you?
So the first thing was, as Tony said, the sales were increasing every year, and that's a huge margin, like 20%. That's a lot, right? And the other thing, like, I know he had two business, he was running two business. It's hard to focus on both, right? So that's why I know I can increase more as Tony, because he don't have time. I don't want to say that he cannot increase. He can, but he don't have that much time, right, to deliver everywhere. So I know that I can increase the bakery. And the other part was there are not so many bakeries in Cape Breton, right? And there were some bakeries in like Walmart, and they are keep getting lower and lower. They're not making that as fresh, like from the scratch, right? That's the other thing that attracted me to this business. And I know I can expand as much as I can. I can deliver to everywhere if I want. So there are more chances to expand this business as compared to the other businesses.
Yeah, yeah. So you saw the division of labor. Tony's continuing to operate the neat side of it, and you have more time to dedicate to the bakery side, and you're seeing opportunity and expansion there.
Expense, yeah.
Yeah, exactly. Good. I'll go back to Lori, and I guess I'll wrap up this series, and maybe we can open up to the audience here with a couple of final questions. But you mentioned franchising. What kind of potential do you see for the Ugly Mug in the next 10 years? Like, is franchising a reality? Is that
Yep.
something that?
First, you
As far
mark
as
my
growth?
word, you've heard it here. They're going to open an Ugly Mug Cafe and Emporium in Vietnam.
Oh, awesome.
Is that not fantastic? That's the best news I heard, right? I said, you make sure you send me a sweater or a hoodie or something. Yeah, I need something. But yeah, so their goal, that's what's so unique with working with international students, was the fact that he had businesses in Vietnam, and then I just met with him. We meet quite often just for questions, and Julie, his wife, who's super sweet, she says, Lori, I'm going to open Ugly Mug Vietnam. She cannot speak very good English, but she said that. And her English is getting better. And I said, oh my God, that's the best news I heard.
Wow.
She's going to open that. She knows how to do it. She's going to employ her family. So, yeah, that's just one spot. So it's just so exciting.
And they're in Vietnam now.
They
I believe.
are, yeah.
They
Yeah.
couldn't come in today
Yeah.
because they hadn't been home to Vietnam. in
They're
several
going to
years.
start the Ugly Mug.
Yeah.
She tells me she's looking for a location. It'll be started. Isn't that exciting? Listen to me. I'm so excited, and I'm not even there. Like, it's just, I'm going to Vietnam. I'm having a coffee
It's
at
like
the
having
Ugly Mug.
grandchildren.
Yes, it's like having grandchildren. I don't want those yet, but that's what, like, it's such a passion. Like, to me now, that's her baby.
Wow.
Yeah, so that's, yes. So we're definitely going to be in Vietnam. Don't know if we'll be out throughout Canada, but that's where it's going to start. So, yeah, I'm happy.
So, Tony, your next step, 10 years, where are you going to be?
In 10 years?
Yeah.
Professional golf tour.
A golf course. Yeah. Lots of time to practice.
No, that's right. I plan on still working probably for another 5 or 6 years. Like right now, I'm only working 40, 50 hours a week compared to 70 or 80 before, so I have that extra time.
Yeah.
You know, it's still a 7-day-a-week operation. We're in 24-hour store and bakery. And so, yeah, I plan on working another 5 years maybe, and then just maybe do a little bit of traveling and hopefully
Great.
a few grandkids. And,
Yeah. So this has opened up all kinds of whole new life for you.
oh, yeah, for sure.
Yeah,
now,
yeah.
Now I know what everybody else felt like in the normal 9-to-5 job.
The normal
Yeah.
people. Yeah.
Yeah.
Yeah. And Jag, 10 years for you. You introduced us some ideas there, but where do you think you're going to be in 10 years?
First, for a few years, I want to increase the bakery as much as I can, and because we are delivering few more places, and if possible, we're gonna open the bakery in few more places, like on the more like in maybe New Waterford or like Inverness or these places.
Yeah.
So, right now, my only focus is to increase as much as I can.
Okay, awesome. So this has been great. I'm going to ask for questions from our audience here, from our attendees. Does anyone have anything that they'd like to ask our panel? No one's talking about the pizza.
So the pizza's a separate business, so there's 3 businesses in the bakery, in the store. Right?
Yeah,
That was all,
yeah.
But they all feed off each other, right? So somebody's in for pizza, they get a pop, they get a sweet for dessert.
Yeah,
Yeah, I mean,
yeah,
it was so bad at the time there, they had like 2-hour wait for a pizza. It was that lined up, right? They could drive
Yeah.
over and everything.
Yeah.
It was, yeah.
yeah.
No, not me, no, we rent off of Needs, Minnesota, yeah.
Okay. Any other questions? Okay, and maybe,
So my question is for Tony, because he asked me not to ask it. So my question is, like, how do you diversify your business? I know, like, you kind of like diversify your, like, you have grocery and you have food and you are into real estate too.
Yeah.
How do you diversify all that?
okay. So, and just for the people online, the question was about diversifying the business. So, Tony?
What do you mean? Like,
Oh, well, I just had for the online audience, because they can't hear the, yeah.
Right.
So, yeah, diversifying the business.
well, it's 3 separate businesses together, right? So is that what you mean by?
Right. How do you diversify the whole?
Well, the work time was, you know, like you would be just there, and if anything come up for either business at the time, it would be whatever needed at the time. So it might be bakery this hour, and the bakery store, whatever, right? Customer complaints, different things. You know, we didn't have many complaints, but you had to deal with everything, right, like that. So you just had a set time. That's why you were there so long, 10, 12 hours every day, stuff like that, right? But it would all help each other out, right?
That's it.
That answer your question?
Yeah. Any other questions from our audience? You've all been so great here this morning, and I'm glad you showed up, and this, well, I think it was a good experience for everybody. Any last-minute thoughts or questions?
I have a question for the panel. What supports did you guys access as far as succession and making the transition, as far as like community organizations or funds or coaching or anything of that sort?
I went through the Cape Breton Partnership. They were very good to assist us with our finding a match for us. I also worked a bit with the chamber. I sent out like information that we were selling it. I worked really closely with my accountant and lawyer, because sometimes there's just people looking for businesses that you don't know. are looking, so they sort of did that contact. I didn't really go public too much till later on, because unfortunately we were trying to sell a business during COVID, and everybody thought it must be losing money, but we weren't. We were lucky. We were still continuing to make money. I think the same thing is that people just wanted a smaller place, different avenue, feel a little safer. So that's what we did. They were very, very helpful. And now you even have more resources, which is fantastic. That's who I'd reach out to. I'd probably be at his door tomorrow if I was selling a business. Todd's, I'd be like, what can we do, right? Because that's who you need to know, I think.
Yeah.
I didn't even know about the Sandbox, to be quite honest. Is it new, or
Well,
has it been a
Sandbox
while?
has been here for a few years,
Yeah.
but it primarily services the student community.
Okay. see.
So I guess my role in that would be, if there was an international student or any student that was interested in purchasing a business or starting a business, I'm the conduit for that. As Jenna and her people with the chamber are a conduit for making that business connection. And something you've said there I think is relevant too. If someone is looking to sell a business, they're not necessarily interested in publicly promoting that. They're not looking to sort of bring up any questions like, are they selling for a reason?
Yeah.
They might have, like Tony wants to play more golf, so that's his reason, right? So reaching out to that neutral third party, like the chamber, is probably for a business a good starting point. Or if you're a student coming into the Sandbox, talking to me, and then we can sort of coordinate these connections and get them to work out. Yeah.
Yeah, we didn't use anybody. We just talked ourselves. We thought this could get done in like 3 or 4 weeks until we talked to our lawyers and our accountants and say, no, you can't do that in 3 or 4 weeks. It took a few months to do the process. So we knew we were doing it. We had a date in mind, and that's how it worked. But we didn't use any outside other than lawyers and accountants.
Yeah. So you were 3-4 months in the process. How long was it?
Yeah, March, since 1st of March, 3 months.
Okay. Okay. Very good. Yeah. Any final words or any other questions we have from the audience before we sign off from our event today? Hearing none. Again, thank you for coming. Round of applause for our panel. And if you want to hang around for a little bit and ask some questions of myself or Jenna or any of our panelists or Sean, please feel free to hang around. We have some more treats left. And we thank you for coming. We thank you for asking your questions and participating. Spread the word. Contact the chamber. Contact the Sandbox. And we'd be happy to help you in any way whatsoever. Thank you again.
Thank you.